Hello, this is Cesar. I am an enrolled agent, licensed with the IRS, and also licensed to practice in tax court. You're gonna see a video of a conversation between Jose Garcia and me. Jose Garcia is a Spanish tax lawyer. It's going to be about the U.S. Certificate of Tax Residence, or Letter 6166 that some people have asked about. I made a video from the US perspective already, which I'm gonna put in the description of this video if you wanna see that. But I wanted to get Jose's feedback from the Spanish point of view, and here it is. This, of course, is not tax advice because everybody is different when it comes to tax. If you wanna get in touch with us, you see our contact information on the screen. You can book a call with Jose, and if you want me to join, then share the link with me. We work for different companies, so our systems are not connected. You have to tell me that you want me to join. So please share this video, like the video and subscribe, and talk to you soon. Okay, so I'm here with Jose Garcia. He is the head of tax at Lexity in Spain. And Jose, the reason why I wanted to speak to you was because there are people in Spain from the United States asking, apparently somebody maybe said something like this, or maybe people misunderstood, but they said that they could escape a Spanish tax residence if they obtain a certificate of tax residence from the United States, or also known as letter 6166. You know, you need to file a form saying you pay tax in the US, and then you get a letter to show to Spain that you are a tax resident of Spain. I did my research from the US side, and I think that is incorrect. That letter is for purposes of getting tax-treated benefits. For example, when somebody is not a resident of Spain, like with the 183 days test, or if they don't have a house in Spain, or they're married and they have children, but let's say I deposit €1 million in Santander. Santander is going to pay me 50,000 euros every year. Because I'm a foreigner, the Spanish government say, before you send the money to Caesar, make sure you take, I don't know, 30%, 40%, whatever it is. And with this letter saying that I'm a tax resident of the United States, I say, Santander, listen, I know you are supposed to withhold 40%, but because the treaty with the US and Spain, you only have to withhold 15%. And that letter says, yes, Caesar is a tax resident of the United States. There is a treaty between Spain and the US. Don't withhold 40%, just take 50%. That's the purpose of that letter for tax treaty. It's not to escape tax resident of Spain, because some people were even saying, even if you spend 183 days, if you get this letter, then you don't have to pay taxes in Spain, which for me didn't make sense as a lay person. And then when I look at the treaty, I look at the letter. Yeah, it's not that. It's a misinterpretation of what the letter is for. But because I'm not licensed in Spain, although thanks to you, I know a lot of about Spanish taxes. I wanted to get your take, because you are a tax attorney in Spain, if my thinking is correct.
That's completely correct, Cesar. You're completely in the right in this case. This sort of letter issued by the IRS saying Cesar is a U.S. tax resident according to double tax treaty, which is used is to appear before the U.S. before the Spanish issuer of the corresponding interest or dividends or whatever source of income, and say, guys, please don't withhold me over the threshold stated in the double tax treaty between Spain and the United States. That doesn't mean, first of all, that you are going to be qualified, that you have to be not paying taxes in Spain. That means that you're going to be taxed according to the double tax treaty. That's the first point. The second point is, first of all, it's difficult to be considered as a Spanish tax resident according to the Spanish tax residency rules, and at the same time a tax resident in the US according to the tax rules of the United States. Because if you are over 183 days physically in Spain, it's quite difficult that you are over 183 days in the US. However, In case that you are a Spanish tax resident according to the Spanish tax residence rules, and at the same time you could be a US tax resident according to the US tax residence rules, you would have to go into the double tax treaty, which says that if that is the case, and you keep being a US tax resident because you are a US citizen in this case, first you have to pay worldwide, you have to pay taxes on your worldwide income in Spain, and with that, go to the US and apply the double tax treaty tax credit. So even if you have that letter from the IRS, double check, because there's the chance that even though the IRS says, no, of course he's a US tax resident, according to the double tax treaty and according to the Spanish internal law, what this means is yes, he will be paying taxes in the US on his worldwide income, but that doesn't mean that first he will have to pay taxes in Spain and then go with this tax credit to the IRS and say, guys, I know that I'm supposed to pay worldwide income taxes here in the States, but I already paid outside. So please apply me the double tax treaty tax credit. So yeah, it's quite misleading sometimes, the certificate, because you can think that that's sort of a green pass and you say, guys, I'm not a tax resident here, don't have to pay anything here.
No, exactly. It's not a green pass. Thank you, Jose. That yeah, of course. This is exactly what I was thinking, and I think the confusion comes from the fact that U.S. citizens are tax residents in the United States always.
Indeed.
So, based on the internal laws of the U.S., we are always tax residents of the U.S. But that letter, and this is confusing too, because there is a different definition of tax residence for the treaty purposes only. Like
exactly.
So there is the general tax treaty definition of if you live in Spain 183 days, or in the case of a U.S. citizen, always, which is the only country except Eritrea that does this. And I think this is part of the confusion. So let's say that the fault comes from the U.S. government, but I wouldn't want people to get in trouble with Hacienda or with the IRS saying I get it, because it's not. They're I don't know. And the interesting thing is that what the people that say this said that this came from a Spanish tax attorney, which I find it hard to believe. I think there is some miscommunication or misunderstanding there. Like, I didn't, I mean.
Yeah, that can happen because, to be honest, as you were saying, the States and Eritrea are the only two countries in the world that even if you are not living in the country, they still qualify you as a tax resident because of the citizenship, which is very strange because you could not be living in the States for 10 years and still the IRS would qualify you as a US tax resident. So in order to say, yeah, fair enough, I'm a US tax citizen, I am a US citizen, I still need to pay taxes there, that doesn't mean that you don't have to pay taxes on the other place.
Correct, right. So, yeah. Okay,
several
bottom line is if you spend 180 days in Spain, or if you are connected to Spain in another way, like you make it your home, you get married, your children, most likely you have to pay taxes in Spain. And if they have any questions about that, they can book a call with you, right?
Yes, please
the first one is free, and then if they need you for anything else, then they can hire you for whatever it is they need. I'm gonna put your information in this video, so they can, if they want, they can book you.
We can book a free call and we can discuss the specifics, and after that move forward.
Thank you, Jose.